Hello, everybody. Thanks very much for joining us today. We've got a short discussion where we're going to be talking through criminals don't follow rules when it comes to fraud, so why should you? As you can see, someone from marketing definitely come up with that tagline. I'm delighted to say I'm joined by three additional people, so you don't just have to listen to me, and I'm just going to introduce them shortly. My name's Roger Lester, and I'm from Featurespace, and I'm one of the subject matter experts. Peter, would you like to introduce yourself?
Thanks, Roger. I'm Peter de Swart. I'm the country manager for South Africa at Intersect. We're a mobile security and authentication firm, so looking forward to the discussion.
Excellent. And Ulrich?
Thanks, Peter. And Roger, my name is Ulrich Jans van Rensberg. I'm from APSA Group Limited, and I represent the fraud risk team in the retail and business bank.
Excellent. And finally, Steve.
Hi, Rog. Hi, everyone. I'm Steve Goddard, a fraud market expert at Featurespace, so I work with Rog on his team.
Excellent. Okay. Well, without further ado, we'll start the presentation. Okay, so as I say, we've done the introduction. So today we're going to be talking about the fraud challenges and the trends that we're seeing, not only in the UK and other regions, but also what's happening in South Africa. Balancing fraud prevention and customer experience, talking through that. And then finally touching on 3DS and what we're seeing across all the different regions. Brilliant. So first of all, fraud trends and challenges. Steve, would you just like to take that?
Yeah, sure. Thanks, Rog. So we're in unprecedented times, and I know that word's been thrown around a lot at the moment. We've got workforces working from home, how we changes in how we interact with each other, an increase in webinars. Sorry about that. And they bring their own challenges. Criminals are using, criminals always used disasters, wars, and now pandemics to kind of to focus the collective anxiety and fear and target the individuals to malicious activity. So we're just going to talk about some of the trends and some of the challenges and some of the things that we're seeing globally and also regionally. So we've discussed there's been an increase in fraud, but there's also an increase in the reporting of fraud and scams, which is great. It's shining a much needed light on the problem, and it serves to educate people. And I don't think, and again, in my experience, I don't think I've ever seen sort of the amount of posts on social media and in the news about scams and how they're changing and how they're affecting people. This pandemic has really kind of focused the public's attention on that as well. And across, there's been various stats being thrown around, but across all sort of financial products, we've seen an increase in fraud rates by about sort of 35% compared to previous months. The pandemic has caused the value of fraud attacks as well to spike by around sort of 5%. A lot of people are moving to online shopping. You see about sort of 37% of South Africans saying that they're shopping more online now. And again, that's global. And what that brings is the focus on different types of fraud that we're seeing. So specifically, what we're seeing sort of globally is an increase in bin attacks, social engineering, and first-party fraud. Bin attacks have been around for a long time. And the recent proliferation of bin attacks may be due to the increase in readily available software on the dark web. These software and these kits, they're becoming more sort of easily accessible. Even down to the surface where being able to obtain them, via Instagram or social media or even YouTube, being able to kind of get hold of these and understand how to commit these attacks. And it's a great example of where greater collaboration between issuers and acquirers can help. Because these merchants have been targeted with the bin attacks and the subsequent sort of card testing, and collaborating between the issuers and the acquirers can help sort of speed up identification of that as well. Social engineering, again, with the changes to how people are interacting, how they're shopping, and with the increase in and the improvements in authentication means the fraudsters are going to have to, they're changing their game, and they're becoming more brazen about it too, taking advantage of people who haven't previously gone online to do their shopping, those who are working from home, who are perhaps not as security conscious when they're working at home as they would be in the office. It's a change in their mindset, and again that leads to first party fraud. Social distancing measures, the financial impact of individuals, and it's caused an increase in opportunistic fraudsters who take advantage of things like the change in delivery protocols. Knock and drop. Instead of signing for something, there's a knock at the door and your package is just sitting there. People are taking advantage of that. And I've spoken to some merchants who are now they're requesting police reports before refunding, or even using advanced interview techniques as part of the investigations to help kind of reduce the number of those claims. I just want to ask the panel: is this kind of similar to what you're seeing in your region?
Yeah. So thanks, Steve. I think, let's from a bin attack perspective. So maybe just to start off with, for those on the on the group, bin attack stands for, or bin stands for bank identification number, and it's normally the first 6 numbers on your card. And we always say there's 3 stages for 3 steps for a bin attack, and the first one would be criminals getting access to compromised data, and they'll use that compromised data as a way of finding active numbers. So they'll use the first 6 digits of a bin number, they generate systemic numbers, and then based on that start testing those. The second step of that is the testing. So they'll run small transactions through your authorization platforms, and once they've identified all the valid cards that's responded, they'll then use that information to process larger transactions. We've seen a lot of that in the South American environment, where a lot of industries or banks and various regions are being targeted. Normally we say banks can protect themselves by monitor transactions real time and find small transactions that tests their bins, partner with your schemes, make sure you understand make sure they understand what you're trying to achieve, and let them help you identify those bins. And then we also say monitor your front-end environments, especially your authorization platforms. So we normally go and monitor those authorization platforms, and with that monitoring, we try to identify potential downtime and standing processes. So we use that as a way to mitigate some of the risk. So from a social engineering perspective, I think social engineering is one of 3 steps of a fraud event. So the fraud event starts with obviously data compromise, as we discussed before. The social engineering itself is trying to obtain your credentials, and I'll explain that a bit later. And then you have the fraud event. So when we look at social engineering, there's various ways of engaging consumers. They'll use scams and schemes through phishing campaigns. So they'll present a hyperlink which you need to open. It will look exactly like your bank, or they'll use phishing, which is a voice call where they present themselves as a legitimate entity like your bank. They provide information that makes you think or believe that it's your bank engaging, and then they create a perception of trust, and then you let your guard down. Once that happens, they try to get hold of what we call at APSA as the keys to the safe. The keys to the safe are normally your logon credentials, your card credentials, so the CVV in the back of your card, and they then try to obtain that information through the social engineering activity. And we normally say never disclose that kind of information to anybody, and always avoid approving transactions if you're not transacting. And when we look at first-party fraud, I guess the pandemic, as you mentioned, is creating financial distress, and that forces people to try and get extra cash flow running. And what we normally recommend merchants in particular is to use a second factor of some sort. So you get the contact details of the users or of the people who's ordered the goods or services. Try and introduce second factors or use biometric as a capability. Paperwork is worthless these days, so a signature or a photo for that matter doesn't necessarily add any value. So those are some of the things that we see in our region, and that we think could help some of the organizations out there.
Excellent. Thank you, Ulrich. Now, the next slide we're going to be talking about, as soon as we settle on it, is authorized push payments. As you can see, there's quite a numerous set of scams that have been associated or is grouped under that heading. And just for the UK alone, UK Finance, which is a body in the UK that's sponsored by the banks, for 2019, they've recorded 455.8 million of fraud, all associated to authorised push payment fraud. So it's something that's gathering in momentum, and probably some of the more common ones that we've seen in the past is imposter fraud. So this is where fraudsters are impersonating the police or potentially pretending to be from the bank themselves, and even romance scams. Now, for imposter scams, the fraud losses there for 2019 was 134.3 million, and that was a growth of 39% from 2018. Romance scams, not so much, only 18.1 million. However, the growth was 43%. And I know in the UK, we're seeing a lot of media attention where we're seeing a lot of programs where a lot of victims are discussing how they've been duped, and how easily they've been handing over their life savings to these fraudsters. So I'm sure there's some of the other scams that are on this slide that possibly resonates with yourself. And on that point, Peter, is anything there that really jumps out to you from your perspective for your regions?
Yeah, no, I think Ulrich has touched on some of the aspects that's happening, and I think what we've picked up as well, quite interestingly, is that especially in this time, Ulrich mentioned it, where guys are cash trapped. What we've seen, Riri said as well, is scams specifically focused on the rewards and loyalty angle. So you have these elements where it's also through vishing, clients would be coerced in thinking that there's, or being led to believe that there's some rewards due to them that can be converted into cash. And then that process is actually then utilized to, as part of the social engineering process, to gather more and more intelligence on that specific person that can subsequently be used in other attacks as well, or then literally through that process, getting access to that person's cash. So it's really, sad that that's the kind of thing, but we've definitely seen that as well. So it's not only about payments, but also where there's some of these rewards that's dangled in front of the customers.
Yeah, no, absolutely. Thank you, Peter. And I think what we've seen is a real defence against these type of scams is actually focusing on the behavioural patterns. So I think where historically rules approaches has been quite effective, I think we're having to think much further now is people are giving away this information, which is, I think Ulrich mentioned, the keys to the door. And basically they were then being used to transaction. It's only then focusing on, is this fraudster acting as we would expect the normal person to? And it's only at those times is it being able to identify these whilst the transaction's in flight. Otherwise, it's being very reactive. So, okay, next slide, please, Steve. So, one of the big challenges that always comes up is how are people balancing fraud prevention against customer experience? And it's a challenge that's always being put on operational people because no one wants to suffer the big fraud losses. But at the same time, there is a big cost to be putting in a lot of preventative measures. And if you go on to the next slide, Steve. Yeah. E-commerce has been fantastic for merchants, especially with the situation that we're in at the moment, where it's enabled retailers to have a much wider market where they've not been able to open their stores or their shops. But at the same time, it's also made them very visible to the fraudsters. So there's a lot of things that retailers and consumers need to start taking on board. And I think Ulrich mentioned it, and Peter, that you do need to be very, very careful when you're communicating via email or text. The alerts or the messaging that you're getting come through aren't necessarily from your bank or from the card schemes, for example. It is making sure, are you expecting that type of information come through? Because the banks will never ask you for a password or PIN number directly over the phone, and even in emails, it doesn't take a couple of seconds just to double check, does this actually look legitimate? And by quickly interrogating sometimes the email, where that email's come from, can quickly spell out that it's potentially this is a spoof email trying to get your legitimate details from you. And what we're seeing in the UK and Europe definitely is a lot more education, because we understand that consumers can sometimes be the weakest point in the chain, because when someone phones up to say they're calling from the bank or the police, they're very forthcoming because they're not suspecting fraudsters to be targeting them directly. So in the UK alone, we've seen a lot of advertisements. One particular bank in question has put out a campaign to help people identify so they don't disclose their PIN number. So the fraudster is pretending to call a customer, ask for identification, can you give me your first and third number of your PIN number? And when they do, say, oh no, sorry, I got that wrong, I was meant to say the second and the fourth. So quite innocently, they've disclosed their full PIN number without possibly realising that that's what they've done. So the social engineering can be very, very subtle, and it's something that consumers and retailers just need to be very, very conscious of. And even with the deliveries now, because obviously the shops aren't open, there's a lot of scenarios where goods are being ordered over the internet and then either being delivered or picked up. And a lot of recommendations I'm seeing from banks is that asking that when customers go to pick up the goods or the goods, is that potentially take the reservation over the internet or over the telephone. But when the customer comes to pick up the goods, then complete a card present transaction, be it chip and PIN or contactless, subject obviously the value of the transaction, because then you get the protection as a retailer of the card presence and services, because you've delivered or you've provided services to the genuine card. So that's some of the things that we've seen retailers changing in the UK and Europe. So for yourselves, are you seeing something similar in the South Africa region, gentlemen?
I can pick up that one just in terms of, Roger, just looking at the balancing of fraud prevention and customer experience. You touched on the aspects around the retailers. What we found in South Africa, that in terms of the banking relationship, the banks are actually quite focused on ensuring that there's the fraud angle is really always top of mind, and then enabling a good customer experience as well. So the banks actually do quite a lot of work to find that balance and strike that balance. However, I think the challenges in some of these other cases is that customer experience trumps all. So there are many of these other scenarios, retailers or merchants or even service providers who really try to just make it a very slick user experience, and that's sometimes or very frequently at the cost of ensuring that the required security is there. And subsequently, there's an angle of where that information can then be gathered through these less secure interactions. There's still an opportunity for fraudsters to gather the information of clients, and it starts with that first phase that Ulrich mentioned. Now someone is busy or is able to gather some information about a specific customer, and that can subsequently be used in another attack or a different attack vector. So I think the aspect that you mentioned there, around customer education. I think it's absolutely pivotal, and the banks do quite a lot of work around that. I think it's important that customers realize that it goes beyond your bank interaction. It goes actually across your entire digital interaction in your digital life. And again, you can implement the required security with no need to compromise the customer experience. So that is something that I think is quite important, that it goes beyond banking. Clients would need to get that and understand that.
Maybe if I can just add, I totally agree with Peter. I think what we also need to take into consideration, it's always good to meet regulations. So I know PSD2 been launched in Europe, and strong customer authentication are principles that needs to be adhered to for that matter. But I do think it is important for banks, for instance, to design their own principles that meets those requirements, but also that anticipates the threats that would surface. So we normally say, when you look at something, that's challenged by data breaches, because the fraudsters know as much of you and they can answer all the questions you can. So when you look at something you own, they break that through social engineering. So a second factor call to you to approve a transaction is that. And then obviously the more tricky one is something you are, but where they get past biometric capabilities. I think it's important, though, to Peter's point, to create a frictionless process, but don't be afraid to create some friction. Customers do appreciate some security, because it creates that perception in their minds as well that you are trying to protect them. Always consider more than one layer of defense, where 2 layers is probably minimum, but if you introduce more layers, to Peter's point, make sure that it's frictionless and it's running in the background. We always say try and improve, identify capabilities that helps you understand more of your customer's behavior, as opposed to having him tell you about his behavior. Introduce second factor capabilities like an approval of a transaction, but do consider creating a step down process where you know enough of the customer. And it's a common terminology, but don't be afraid of using machine learning and artificial intelligence. Just make sure that you invest in reputable companies who's done it well out there, because you do get a lot of people who claims to be good at it, but they don't necessarily deliver the results.
Excellent, thank you, Ulrich. And that leads me very nicely onto the next topic and the next slide. So it's around application fraud, and I think we've touched on this through a couple of the other slides already in discussion points. And I think at the moment, it's becoming, or I'm not saying it's becoming, but it seems that the fraudsters seem to be going for the information a lot more directly, either through social engineering or data cyber attacks. So it's absolutely paramount, and it's great to hear in South Africa that the education is forming part of the armory that the retailers and the banks are leveraging to help protect against the fraudsters that are going on out there. And I think as well, what's quite important is, when you do get that phone call from someone pretending to be from the bank, if someone's to phone me up and say, "Can you give me your password and your PIN number?" Yeah, absolutely, you're going to say no. But I saw a show, the Jimmy Kimmel Show. It's a US program, and he just did an experiment with one of his reporters, and just by asking some very simple social engineering questions, how they were able to get that specific information out of individuals, in some cases without them realizing that's what they've done. So they divulged the information, so their accounts were totally open to the fraudsters. So in this day and age now, there's a lot of speed now in the identification and awareness of where customers' accounts are being hacked, because obviously everyone's got online banking now, and people are getting text alerts when there's transactions being undertaken on their account. But that's being reactive, and I think the key really is making sure that everyone's being proactive in these scenarios. And as I say, I think you've touched on it already, Ulrich, is that the machine learning, the AI is becoming a key component, and it's without that you are always going to be playing catch up, and that could be a very, very costly lesson. And again, absolutely, just don't. If someone tells me they've got these wonderful things, just don't take their word for it. You know, ask around. It's always good just to double check they are who they say they are and they can do what they say they can do. In an English term is the proof is in the pudding. So hopefully that translates to South Africa. I have no idea, but I'm sure someone will tell me after this webinar. But yeah, so on that, what's your view on this, on the application side? I know you've touched on it already, but is there anything else you'd like to add?
Yeah, I think what's important for consumers to remember that the data is everywhere. They participate on social media platforms. They subscribe to various online sites, and as a result, there's very little control over what they disclose. So, consumers should be considerate when they share information. I think. We are, as human beings, are very familiar with physical threat when it presents itself, but we don't necessarily pay attention to digital threats that surface. And we need to make sure we understand what are some of the digital threats. And Peter highlighted the awareness that needs to be focused on. Financial institutions should also try and rely less on what consumers provide as information, and try and design strategies that anticipates how criminals are going to manipulate the information that we have to get through. So I think from a customer perspective or consumer perspective, try and think before you disclose information on social media platforms, and on subscription platforms, and always be considerate not to disclose the keys to the safe, as we would refer to it.
I think it's about the balance, like you said. You know, we don't want a consumer base who is overly cynical. We want them to trust the platforms, and we want them to use the platforms and enjoy using the platforms. But like you said, we don't want to scare them, you know, to say that, you know, everyone's out there after your money, after your details. But you just need to think. You just need to be considerate. You know, there's a perfect word for it. Consider who you're giving your data to, where you're posting it, where you're sharing it, and who you're sharing it with. Excellent.
Thank you, Steve. Thank you, Ulrich. And that leads us nicely on to the next part, which is back to you, Steve.
Well, yeah, it flows nicely, because we're talking about the trust and that kind of, and the friction and the customer experience. And, you know, 3DS introduced in 2001. I think I can safely say it's been a mixed bag in terms of adoption. Some countries with a kind of a bigger ecom market have accepted it quite well. Others haven't. From, you know, my experience, you know, people, even certain countries, you know, talking down to a regional level, country level, you know, people just aren't using 3D Secure because, and it's causing great sort of abandonment at the point of checkout, because people don't want that. You know, there's, again, we're talking about the balance of that trust. People want to know that they're secure, but they don't want it to impact too much on what they're doing. You know, they want a smooth process. And what we can see here is the link between the adoption and the associated fraud which are reported. We can see the kind of the regions at the top there who have adopted 3D Secure. The fraud basis points are very low compared to other countries who are potentially not as experienced in an e-com market world. You know, have very high basis points. And you know, just what we've kind of come to see with the 3D Secure 2 is the changes that have been made. You know, back in 2001, 3D Secure, it wasn't built for people buying things online or on their mobile, whereas 3D Secure 2 kind of takes us to the next step. It has that in mind when it's when it was created, to kind of leverage off changes in how people are shopping now. You know, looking for people want a seamless mobile experience. They don't want to be on their phone trying to pinch and zoom and add in their password. You know, they want that to be you know, efficient. They want it to be quick. You know, they're shopping on the go. You don't want to have to kind of be looking around and kind of doing things on their phone. You know, we talk about a small screen. And while the primary focus is to meet sort of strong customer authentication requirements and sort of biometrics and two-factor authentication, 3D Secure with that kind of with the sophisticated authenticators, we can see the change between passwords and one-time passwords, which are susceptible to social engineering. We're talking about a smoother process, and driving those countries and regions who haven't adopted it because it causes that abandonment to actually kind of rethink that. And see how it can increase their conversion rates and make it faster and easier for their customers going forward. This is there to protect them. This is there to kind of reduce fraud. And yeah, it has been inconvenient, but what's been done now with the next generation of 3D Secure is to kind of identify what the faults were. And make it better all around. Being able to select merchants which you are happy with. You don't want to, if you shop there again and again, it's learning, and so actually we don't need to step up for this one. And again, that comes back to the machine learning and the advanced kind of technology that can sit behind that and learn what good behavior is and what isn't good behavior. In regards to kind of Peter, what are you seeing in regards to 3D Secure in your region?
I think, thanks, Steve. On our side, I think we're quite lucky that there's been quite a great adoption of 3D Secure in South Africa. So we're pretty much on the forefront in that, and e-commerce as a whole is definitely still growing in South Africa. So again, sticking to what's topical at the moment, we've seen massive increases in card not present transactions. In many cases, as a result of the lockdown in South Africa. We've seen many people's actually being forced to do their online purchases for essential goods. But as a result, the positive side is that I think there's been a massive awareness created around what some of the services and products are actually available. So that's all positive. The downside is the fact that the card not present fraud is still by far the largest component of banking fraud experienced in South Africa. So it is something that still requires quite a lot of vigilance. So we've got good adoption, 3D Secure. We also seeing the guys migrating to the EMV 3D Secure. So definitely, the aspect of a lot more sophisticated authenticator component. So the transactions are still authenticated, but it's a smoother experience, and I think it will actually create a lot more of these nice experience and entice people to do more e-commerce. What we have seen in terms of that increase in transactions, well, it's not only the volume of transactions that's increased, but interestingly enough, quite a change in the profile of people doing online transactions. So the typical online shopper and the profile of that has changed tremendously. So all the way from the guy, the bachelor, all the way through to grandma doing shopping online, that profile has changed quite a lot. So it's broadened that base, but as a result, it's broadened the base for targeting fraud as well. So again, there's quite a number of things required to ensure that the customers are still kept in check and kept being made aware of what they need to be vigilant about. So yeah, and I think one of the key aspects that we've seen as well is also not to forget about the silent friction almost. It's always important to balance again the customer experience with fraud and what clients experience around ensuring that a transaction has actually gone through. So in many cases, you also want to be sure that transaction has actually taken place. So in certain cases, and I think Ulrich mentioned it earlier, is that in certain cases, the friction actually does play quite a bit of a role just to create that customer confidence as well, and to ensure that trust is instilled.
Yeah, that friction, the friction is there for a purpose. There's a lot we can learn from the friction. Pushing customers to step up. Gives us more data, gives machine learning more data as well. You were saying around the different profiles of customer, from your bachelor to your grandma. That's all great for machine learning to learn from and help to identify different patterns.
Okay, excellent. Thank you, Steve. So we're coming to the end of our chat. Hopefully you all enjoyed it. But before we go, Peter, Ulrich, I suppose I'd just like to ask if there was one key takeaway that you would like the people that have attended today to go away with, what would that be? And if I start with Peter first.
Thanks, Roger. I think, importantly, we've talked a lot about the technology, and I think for me, key takeout is that, implement technology that is required for you to trust the interaction with your customers. And then through maintaining that trust, if you install that trust and you maintain that trust, that opens up so many more opportunities for digital engagement. So that for me is, I think, the key takeout. Ensure that that trust is instilled and maintained.
Excellent. And Ulrich?
So I think, thanks. I think to add to Peter, I think financial institutions need to focus on preventative controls and design early warning triggers that helps them identify threats. And then from a consumer perspective, I think just focus on not disclosing information. Don't be a victim to social engineering. Hold your keys to the safe close to your heart or to your chest, as they would say, and think before you react or respond. Rather pause and just consult an independent party. Sometimes consumers do want to believe great stuff, but it's if it's too good to be true, it probably is.
Excellent, thank you, Ulrich. And for myself, one key takeaway in having to speaking to Peter and Ulrich is always make sure you give enough time for that pineapple beer to brew. Otherwise, it's just juice, as you guys have told me. So, well, hopefully those who have been listening have enjoyed the session today. If you have any further questions or anything else you'd like to know, please reach out to any of us on the panel, and we'd be delighted to talk to you. Thank you very much. Thank you, gentlemen.
Thanks, guys.
Thank you.
Thank you.